Hello everyone, welcome to the ichimokocharts.com daily analysis for the Euro US dollar FX for Thursday, May the 24th, 2012. Well, a continuation of the trend to the downside today, a candle with a lower high and a lower low, and another black-bodied candle. The size of the black body, however, is getting smaller and smaller as this trend continues to the downside, so some concern about continuation of the trend, but it's certainly not a small black body. Certainly if we compare it to these black bodies which ended the trend, they're much smaller than what we're currently seeing. But the reduction in the size of the black body does suggest that the sellers are making less and less net bearish progress as the market continues trading down each day. If we do have another smaller black body, especially down around this 124.55 area of support, then it will set the market up for a potential retracement. We have had some very bearish activity. It wouldn't surprise to see the market want to take a rest. Now with today's candle, we have had the market close down towards the low, so the sellers have maintained control of this market, showing fairly strong commitment to taking this market lower as well. The buyers found resistance around the 125.86 level, and we opened around that level, attempted to trade above there, and were fairly strongly rejected for the market to close down here at 125.31. In terms of the current Fibonacci retracement, which is now an extension, we're looking at the relationship of the current downswing to the previous upswing, and we now have an extension of that. Previous day's trading, we traded through the 100% level in a very bearish manner, tested to the 161.8%, and today we've closed right at the 161.8% at 125.28. The market did test down below there briefly and was rejected from that area, so that's a very important level for tomorrow's trading. We are now seeing price rallying in this current candle as it's developing, so there is a possibility, because of that relationship with this Fibonacci ratio, that we could see the trend end down around here. But as I've mentioned, no sign from the balance of buyers and sellers. The sellers are still firmly in control of this market. In terms of the Fibonacci extension, and we're comparing the current downswing in the market to the previous downswing here, after we've had this retracement of that previous downswing, and the market has now taken out the 61.8% level that was mentioned yesterday, where there was some rejection, and we've closed through there in a very bearish manner. The continued bearishness in this market is suggesting that we will attempt to trade through the 124.9 level, the 78.6, which is only a minor level, but we could see the market testing down to the 123.99 level, which is the 100% level. So some of these areas, these Fibonacci relationships, can be quite important to our market. So especially if the market trades through these strong support at 124.55, that area around 124 roughly will be important moving forward. In terms of Ichimoku, the market remains bearish in all three timeframes. We're trading below the cloud, below the Kijun-sen, and below the Tenkan-sen, so we're bearish in the long-term, medium-term and short-term timeframes. The Chikou span is below the corresponding price action, so confirming the bearishness that we're seeing in this market. We have the sellers supporting this market to the downside. There aren't any signs of strength from the buyers at the moment. We've had rejection from 125.86, so that's important for the market tomorrow, but it certainly looks as though the market will end up testing to lower levels. Let's watch those levels that I've described with those Fibonacci relationships, and also the support down here around the 124.55 level.